Good morning, everyone, or good afternoon, or good evening, depending on where we're finding you. I'm Shannon Stroud. I'm the CEO of Invest Africa in the US. And by way of very brief introduction, just so we can jump right in, let's see, let me go back up. George, if you could go up a slide or two, one more. There we go. So just by way of very brief intro, so we can dive right into the meat of today, Invest Africa is really where global capital meets African decision makers. With our 60-year track record and our deep member and partner network, we really just help investors cut through complexity, access markets, raise and deploy capital with confidence. And we do this through our events, our investor missions, and overall direct connectivity. So we have some events that will take place through the first half of the year. If you want to go to that slide, there you go, George. We'll flag these a little bit more detail. My colleague Callum Hill will mention these at the end of the webcast, but basically want to sort of dive right in and, flag that through our events, through our investor missions, and through our direct connectivity, we really seek to de-risk entry into African markets by combining networks, intelligence, and access. And we help investors get smart and get connected and get deals done on the continent and beyond. So on to the getting smart bit. So we're very delighted to have some esteemed panelists with us today to help us get smart and to help us examine the key drivers behind Washington's evolving approach to the continent and the implications of the shifting world order for trade, investment, and commercial opportunity across Africa and the ripple effects globally. So without further ado, I will kick it over to Aubrey just with the caveat from a housekeeping perspective that we are recording this webinar. You can share your questions through the chat. We'll be monitoring that. And we will obviously, you can feel free to reach out to myself, Shannon Stroud, or my colleagues, George Meadows or Callum Hill, who are on the line with any questions. But go right now, let's move on to the heart of the matter, and I'll kick it over to Aubrey Hubry, who is a senior fellow with the Atlantic Council and co-founder and partner at Tofina Capital, long-standing member of Invest Africa's Advisory Council, and a great trusted partner and friend. So, Aubrey, over to you.
Thank you, Shannon, and thank you everyone for making the time to join this important discussion today. I'm so pleased to be joined and welcome the panel today, joined by Bethany Aquilina Brez, the Acting Vice President of the Office of Foreign Policy of the DFC here in Washington, Fanta Conde, who's a partner at Cross Boundary Group, Scott Eisner, the Senior Vice President at BGR Group, and Edmasu Tedesse, Group President and Managing Director of the Trade and Development Bank of East and Southern Africa. So it's a robust group, and we are looking to dive into this interesting conversation. And it comes at an interesting time, given that African growth for the first time is projected this year to surpass Asia's. And we're looking at a continent on average growing around 4.5%, which puts some credence to the statement some of the fastest growing countries in the world continue to be in Africa. And the global interest in critical minerals has also put a spotlight on the region as many look to find ways to partner to unlock critical minerals for national security in the US, but also in Europe, et cetera. So we come with high interest, though there are many other things going on. So first, I want to turn to Scott. You, for many years, led the US Chamber of Commerce's business around African markets, and just get your perspective on what you think the current interest level is and where there are a lot of uncertainties for US investors in the region.
Awesome. Well, thanks, Aubrey, Invest Africa, fellow panelists. It's exciting to be back live with you. I've known Aubrey for quite a long time, and I'm over at BGR Group now, which is a global government affairs business advisory firm based here in Washington, D.C. I think Africa, much like the rest of the world right now, is dealing with issues that are beyond their control to some degree. There is a real palpable interest, but it's selective when it comes to Africa. The capital is flowing, We'll hear from the DFC on this call later today that there are strategic investments that's scalable, but it needs to be de-risked, looking at areas as energy and power, critical mining, and minerals. We've seen that uptick. We've seen U.S. Congress talk about stockpiling that in the last 24 hours. What is the role of the U.S. in global critical minerals, especially as you look to move away from a China-led both extraction, processing, and then deployment side of the equation? But there's other areas as well. Logistics corridors, DFC just announced a big deal around libido. You've got digital infrastructure and fintech, which are really a boom area for many of African economies. But what's complicating that right now is that political risk element that's going on globally. That's just not a US thing. We've seen this in the Middle East, obviously in the last 24 hours and week with Iran, the ongoing conflicts around Ukraine, the continued struggles around Latin America with Venezuela of recent, and then overlay that with US trade policy. So you've got AGOA, which expired last year. It's coming back to life just this past week. Congress and the House passed the measure to move forward. The Senate will take it up. It will probably have some changes around the criteria. I would look at countries like South Africa as a question mark right now about whether or not they continue to be kept into it, or are there market expansions so it becomes a whole of Africa approach that North African countries as well could participate. So there's a lot of moving things that are going to take place over this Congress. It's an active Congress, and then we'll be dealing with in the near term whether, when, not if, but when the Supreme Court decides what to do with the 232 tariff issue. So this combination of aspects around insecurity but opportunity are giving investors both promise but pause at the same time, in same level of time. So, in roughshot, Aubrey, you got to look at areas that are critical to your business and where you can make the case and where you've got government buy-in, both on the U.S. side to help de-risk, but also the long-term strategic offtake and the consistency of government engagement on the African side. So you need folks like the DFC and XM to be there as your partner. You need to look at the energy and power space where it's continued to be huge demand, but also this mid-level processing power that isn't just a raw extractive take to China model. How can you add value locally and perhaps have final manufacture in the US to be part of the Trump investment in America story? So that's really what we're looking at today.
Yeah, and Scott, I'm glad you brought up South Africa. The relationship the U.S. has had with South Africa has been complex for many, many years, as you and I know, but it's in many ways gotten more complex in the last year and a half. Can you just give us a summary of where you think relations stand at the moment? And what South Africa's position as kind of the gateway for U.S. companies to the region, does that still hold?
I think it's shifted quite a bit. Both the economics of South Africa changed quite a bit. You still have a huge American footprint. We're down there, 700 American companies heavily invested. It was, for many American companies, the first port of call and the first headquarters they put in there. But the continent's diversified. The geopolitical challenges of South Africa, as marked by the last G20 meeting, can't be overlooked. And the U.S. government, in my opinion, from reading it, and this isn't, a stark example, but doesn't feel welcome by the South African government anymore. It doesn't feel like there's a strong partnership. It feels like the U.S. invests a lot and then are rebuked on the other side through the actions of South Africa. So I think that tone is going to continue this year. There is a challenge afoot in South Africa about what its future is, and that's something that the parties in power are going to have to figure out with this coalition government. But there are other markets. You've seen a boom area in Ghana, for instance, right? Gold has helped to bring their books back into balance. You've seen an evolution of that economy over the last couple of years when it was, beholden to the IMF. They're changing. Yeah. I think Nigeria is doing some really interesting things to move the ball forward. Kenya, still I think is in a challenging world of what footprint do they have, but there are some of those economies that President Trump brought to Washington this year to say, hey, it's not just the big guys, the smaller economies matter as well. And so I think as investors think more and more about the African footprint, the African opportunity, it's going to become which countries present the best opportunity and move away from a more all of Africa approach to what is that industry that I need to invest in, that one economy that's going to drive my footprint.
And not the default automatically to South Africa that we've
Correct.
seen. Admaso, I'd like to come to you. You sit in Nairobi. Your historic footprint for the bank has been East Africa. what is the outlook and view when it comes to opportunities and the growth of East Africa?
Yeah, Aubrey, very happy to be part of this discussion. I trust you're hearing me.
Yeah, loud and clear.
Fantastic, fantastic. Yeah, so I think the growth story that you referred to in your opening remarks very much applies to the East African part of the continent. We are seeing growth levels continue to be quite buoyant at the 6% level. Several of them actually about 7%, Uganda, Ethiopia, Rwanda, and so on. And so even Kenya is at 5%, which is quite good. It's well
Yeah.
above the population growth. So the numbers are good, and the diversified nature of East African economies is
Mhm.
working very much in favor of the resilience that we've been seeing in recent years. But the very interesting development on the East African seaboard is you're getting a resource sector boom coming in alongside the strong services and agriculture sectors that have always driven growth. We're also seeing a lot of manufacturing investments coming in. So you're seeing natural gas, you're seeing not that it's always the best thing to have in a climate change world, but oil is also coming into play.
Yeah.
We've had it in South Sudan, but Uganda's coming on strongly this year. Not just crude, but also refining capacity, doing what Mr. Dangote did on the West African seaboard. Uganda's poised to really start doing some interesting value addition to its crude. And of course, we've seen Mozambique, Tanzania do very
Yeah.
interesting, work on the natural gas side. And I think the U.S. needs to be commended for supporting Africa's just transition agenda because Mozambique was really very happy to get that $5 billion US Exim credit that came in about a year or so ago. And it's not been very easy to get that kind of support for the natural gas sector in Africa. And a lot of
Yeah.
Africans have been a little bit disappointed that the rest of the world hasn't been as forthcoming. Of course, Japan has been very positive and some of the European countries, but just generally speaking, we've had a very helpful boost from the US on the gas side of things. So
Yeah.
energy alongside critical minerals, good growth
Yeah,
story for
and
East Africa.
one thing I've always appreciated about East Africa, when you talk about potential for adding value to critical minerals processing mainly, it is power intensive, and a lot of East Africa, because of its renewable footprint, has more competitive power rates that might allow for that processing. And Masa, you mentioned the role of US Exim Bank. This past couple of years, we've seen some very interesting partnerships between African DFIs and, say, DFC and others. And just maybe you can reflect on the role of African DFIs in a world that's changing right now. How do you see it as leading one of the top four of them?
Well, yeah, Aubrey, I think African development finance is kind of repositioning in the same light that came out at the Seville conference in June last year. The global development finance industry met, and one thing that was very clear is these entities, these financial institutions need to multiply their balance sheets 3x, right? That was one of the key outcomes of Seville. And of course, that has always been the agenda of African development finance. We're coming from a very low base. We need to grow very fast, and partnerships are critical for that. And so what we of course have had a very good set of debt relationships with U.S. counterparts. Of course, Exim is one of them, Citibanks of this world, and several other American commercial banks. We think the U.S. can do more to support development finance in Africa. We've seen the DFC and AFC do very interesting things in recent years. We think that should really set the stage for more partnership because, from what I've understood, the U.S. approach to Africa is a lot about partnership. It is,
Yeah.
of course, transactional around specific priority areas, but there's always been a lot of talk about having African institutions be in a position to lead the security agenda, but it should also apply to the finance sector, I think.
And how, Masu, do you think DFIs, African DFIs, can, leverage U.S. capital markets in order to grow their capital base?
Well, we have been very active in capital markets, typically out of London, but we want to do more out of the US. And of course, there is always, a lot of need for some enhancement if that can be made available. I think we had discussions with DFC once upon a time around some credit enhancement to allow us to tap American capital on the funding side, the debt side, but to do it at affordable rates. And of course, DFC has provided those types of enhancements for certain transactions in the climate area in the past, but I'm just thinking regional integration, some of these job creation industries that I understand is now very much being supported by the US because, of course, job creation is important on the migration side of things. And so we're thinking that there could be a lot more synergy there, and we're hoping to have conversations along those lines in the future.
Yeah, exciting, the potential. I mean, I even think of national finance institutions like Bank of Industry in Nigeria issuing bonds, raising money through capital markets. I think it's going to become even more critical as African development finance becomes the front line of project development, the front line of filling gaps left by traditional donors. And maybe we can speak, Fanta, you can speak a little bit to that. As we discussed prior to the call, you've seen a lot in Cross Boundaries footprint of, what's happened since USAID has left the world, but left Africa for sure, what gaps there've been and, how they've been filled by local players and others.
Yeah, sure. Happy to take that. Hi, everyone, and apologies for my voice today. I promise I don't sound like this, that I'm just dealing with something. So yeah, thanks for the question, Aubrey. Just as a brief introduction, Cross Boundaries an investment and advisory firm that focuses on attracting capital in underserved markets, with a big focus on Africa, where we have about 10 offices. So yeah, I think I'd like to highlight one point that was somewhat mentioned is that, there is a shift and not a complete loss of US government funding, right? I think we still see some US activity in Africa through investments. DFC, for instance, has and is playing a critical role for scaling growth, especially through infrastructure. And I'd like to highlight that they're doing it in a very intentional way, right? It's not necessarily just out of DC, but through people on the ground that are there to vet and identify, the best opportunities to make it a win-win investment. And I think that's where things are going. And this approach has its own merit, right, for sustainable growth. Another point to highlight here is the growing importance of other players, right? I don't know if one could say for sure that, foundations, for example, are investing more, especially to fill the gap. I think studies can say that. But one thing we can say for sure is that their funding is becoming more and more critical, right? Given the gap that exists today. So the likes of the MasterCard Foundation, the Gates Foundation have been investing for years, deploying funding in Africa across several sectors, including agriculture, health, services. And the idea there is that now more and more different entities rely more on this capital. And these institutions are being very creative and open in different ways to doing that, right? It's not necessarily just the traditional grants that were, more popular before. Now we see openness to more blended finance structures to be able to play that catalytic role in development on the continent. We see corporations as well, right? There's local investments from corporations, more pressure from governments, to make those things happen. When we look at mining economies, which are very much important in Africa, we see a lot of corporation acting in that sector, making intentional investment in development and somewhat filling that gap. So all this to say that, there's still some US funding and some great actors, still deploying it. but I think others, like the foundations and the corporates, are playing a more critical role now, and are relied on a lot by the African countries and populations.
Yeah, I would also say that functionally, a lot of the gaps are going to have to be filled by African capital, whether that be from governments and or development finance institutions, maybe even local philanthropy. Have you seen any of that happening, Fanta?
Yes, I mean, I think definitely governments are looking inwards and like trying to make sure that, they're setting up in a way that, growth could be, maximized, right? So I think one thing that I would love to highlight, West Africa is definitely the region where I have the most experience, and I've seen a lot of things happening. And then when we look at the projections for growth, right, by the IMF, right, in Africa, you see that out of the top 10 ranking fastest growing countries in Africa, five are from Francophone West Africa, right? And I think that is really important to highlight because the drivers of that, going to, looking inwards and trying to maximize. I think, we have the incumbents like Cote d'Ivoire that are there and like, relying on economies, on factors of the economy like agriculture, infrastructure, energy, all sectors where we've seen US investment before, but we see a lot of local investments, right? You have, household names in these countries that are growing, developing, and now going beyond their own investments into creating like conglomerates, right? Where they invest in other things. And I think we'll see a lot more of those happening, not only Cote d'Ivoire, but also in Senegal, that's growing, right? There are new discoveries. Countries are investing in understanding and seeing what type of resources they have. When we talk about Senegal, recently discovering some oil and gas, which is going to give them not only a stronger position in the region, but make them attractive for different type of investments, both local and international. And
Yeah.
finally, I think, want to touch on Guinea, which out of that list is a bit of an outlier, right? Coming actually top with north of 7% in projected growth rate. And that is mostly driven by the Simandu, iron ore project, right? And I think that ties into, countries looking inwards and local investment or reorganization, because when we talk about this Simandu project, it's been talked about for years. I
Yeah.
personally was born and raised in a mining city, and as much as I've lived, right, mining has been at the center of Guinea, and then Simandu, maybe around when I was 10, was the topic in everyone's mouth. But to see it happening and come off the ground today, it's really because countries are investing in themselves and trying to make sure that some of that growth is influenced inwards versus outwards. So yes, definitely seeing a lot of that movement happening. But yeah, I think with it happening, it would continue attracting US capital, especially given that the new focus is on investment, over aid. And that's just creating a better environment for that.
Yeah, thank you for that. I mean, I was surprised when you hear stats like Simandu has outlasted something like 4 presidents of Guinea and 6 CEOs of Rio Tinto and been there. It's almost the Inga Dam of West Africa, if you will. But I think all of these resource finds for Francophone West Africa is going to add even more acceleration to their growth as they've been some of the top performers. And speaking about developing very large projects in the project finance, Bethany, I want to bring you in. Maybe you can speak a little bit about the priority projects that DFC has currently in African markets and how they fit in with the kind of geopolitical priorities of this current administration here in Washington.
Great. Well, thank you, Aubrey, and thank you to Invest Africa for today's discussion. So it is great to be here representing the U.S. International Development Finance Corporation, otherwise known as DFC, and to really talk about how our economic statecraft tools are driving more investment in Africa. I lead U.S. DFC's efforts to advance U.S. foreign policy through strategic investments in Africa and in other regions of the world, and really driving private sector capital into Africa is a core element of our mission. So as the international investment arm of the US government, we drive private sector capital to achieve three core pillars of our mission. And that's to advance US foreign policy, strengthen national security, and foster economic growth. And Africa is just central to this mission, both as a growing consumer market, but also as a source of natural resources that are critical for securing, U.S. military, industrial, and technological supply chains. We already have an exposure in sub-Saharan Africa of over 10.8 billion as of the end of the fiscal year 2025. But looking forward to our priorities for investment in the region in particular, we do expect that to grow. Critical minerals, for example, is a key priority for us in Africa. Our investments in this sector in Africa are helping to secure reliable supply chains, prevent monopolization of the sector by strategic competitors. And so we're really looking to partner with allied nations and the private sector to develop mining, processing, refining capabilities, and really enabling the infrastructure. So, transport and logistics, energy, so that we can ensure a stable and diversified supply of critical minerals. That's just vital, as we know. There's a couple sort of new developments I wanted to talk about that are
for sure.
representative.
Moving quickly.
Great. Some of these, they represent our priorities, and they're really good examples of some of the investments that we're trying to drive to advance these priorities. So one, the Libido Atlantic Railway. So on this, we have a DFC loan that's going to help to restore more than 800 miles of the rail on the route that goes from the city of Luau in the Democratic Republic of Congo to the port city of Libido in Angola. So an investment like this is a great example, right, of how we are trying to advance U.S. interests as well as economic development. This Libido Atlantic Railway, our loan, is expected to increase the transportation capacity of the rail from 0.4 million metric tons per year, where it is today, to 4.6 million metric tons. So that's just one example, and that's just from DRC to Angola.
And an example of where DFC was working with African capital, in particular Africa Finance Corporation, that did a lot of the early development work for the new rail spur into Zambia for the Libido Railroad.
Yes, exactly. And I think, we're going to continue to look to these partnerships. One of the things that all of my fellow panelists have mentioned today is sort of the importance of U.S. government, of the DFC, of XM, and to de-risking private sector capital into these markets. And so the important part is that, we have a role to play, as well as lots of African partners, whether countries, the private sector. You mentioned DFIs before. So again, we're really looking to increase private sector capital in these markets, really advancing economic growth and really advancing a lot of U.S. interests. But we know that we have to work with our partners on this.
And maybe you can speak to other projects or other deals. We know that DFC is deeply involved in the U.S. DRC Critical Minerals Agreement that was signed, and we're currently looking for more and more projects under it.
Yes, so our priorities in DRC really do align with the goals of the recently announced Strategic Partnership Agreement, which includes critical minerals supply chains, energy, infrastructure, and economic and trade activities. So at around the signing of that agreement, we announced the signing of two letters of interest, and we wanted to advance projects that will advance a lot of the U.S. priorities in the DRC, but key infrastructure and critical minerals investments that we know are important to DRC's economic growth. So one was a letter of interest on the Libido Railway extension that we signed with Mota and Gill. And then the other was a letter of interest with to create a trading company joint venture with Mercuria and Gécamines in the critical minerals sector. So those are just
I saw that pretty dramatic headline coming out of that second LOI, which is around copper exports to the U.S. I know that when I speak with a US industry, whether they're the GMs of the world or other major providers, off-takers, such as Siemens, they say copper is what keeps them up at night. And the copper demand projections are huge. So this kind of project has potential of scale, it seems.
Yes, and it's a great example of what we can do in the DRC and what we can do in terms of mobilizing more private capital into some of these very key markets. So those are just examples of what we expect to do more in that region to advance, the goals of the strategic partnership agreement, but not just in DRC, in many, many other African markets as well.
Yeah, I wonder if, where we're going to see kind of the synergy between US government tools. I know you work very closely with your colleagues at XM and Department of Commerce and US Trade and Development Agency. But I'm even thinking about a case that might be analogous to the DRC one, which is what the DFC has been doing in Ukraine. And in Ukraine, there's a critical minerals agreement and a fund. But in addition, State Department is looking to put resources to facilitating that investment. So, if we can think about ways to use multiple government agency tools to facilitate investment into a country like the DRC, we may see additional progress. I don't know if you have any thoughts on that, Bethany.
Yeah, so I think that's a really great point to make. For DFC in particular, we have a role to play alongside our U.S. government counterparts. So, one of the things that's important for us to be doing is to provide businesses, provide investors who are very interested in either getting into these markets or expanding their investments in these markets. We can provide them as DFC with a full suite of financial tools. So we want to be reducing risk and supporting their investments in these markets. We can work with our State Department colleagues, we can work with our XM colleagues, we can work with our colleagues from the Department of Commerce. We all have a role to play. We all have different financial tools and different aspects and different parts of the supply chains that we can come into. And for DFC, our tools include political risk insurance, which I think is important for a lot of these markets, in addition to being able to do debt investments, equity investments, fund investments, and some project development support that we're working with USTDA and other agencies more on that.
And at a scale that we haven't seen before. For those listening, the US DFC was reauthorized by US Congress in December with a overall cap, $205 billion, which is up dramatically from its founding level at 60, and giving more resources in the equity pot, which is something that many of us have worked hard to encourage, because fundamentally de-risking projects and funds requires some equity. And DFC historically was constrained in that area.
Yes, I'm really excited about our recent reauthorization. Those are just some of the changes that it has brought for us. It's opened the number of markets that we can work in. But I think, as you mentioned, our maximum contingent liability growing from 60 to 205, is really going to enable us to do more of those investments in infrastructure, investments in critical minerals, things that are large ticket investments. And then we do look forward to using our equity tool to its full capabilities, which we know is so important for advancing U.S. interest, but also really driving growth in a lot of these markets and the type of financing that a lot of companies are looking for.
Yeah, and we have one question from the audience that I'd like to bring Scott and Bethany get your views on. But what are non-financial tools that DFC has to crowd in private sector capital? And I like that question because it's something I think about regularly, which is the signaling power of the US government. I remember back when Power Africa was first launched, I was very skeptical because I felt that there was not many actual resources, dollars behind it. And I didn't think it was going to move the needle for US investors. But then as an advisor, I was called by all these companies, some from Michigan, California, et cetera, that were suddenly interested in African markets. And it was solely because the US government was talking about it. So I'd love to get, Scott, your thoughts on that kind of power of signaling and non-financial tools the US government has. Anything else you want to chime in on, Bethany?
Great. Thank you. I mean, that's actually the most important part. Showing up is 90% of the game these days. If you're in the market and you're willing to move quickly, it matters. And I think the meeting that the NSC and President Trump pulled together earlier this year, those heads of state, showed an early signal of the U.S. importance of the African market and the realization that perhaps China has for too long. Not that this is China is the bad actor; they were the one in the game, right? You can't fault anyone for taking money and investing alongside others that are there when others aren't. But it did show a recalibration of the U.S. and you've seen Secretary Bessent think about critical mineral supply chain development globally, and how the U.S. Helps move companies out of the China sector into the African market. So it is critically important, as we see more and more U.S. officials get sworn in as appointees or as careers. The role of ambassadors plays also a critical role. But the most important thing is seeing African leaders show up in the White House as partners, not on the lecture tour that we were so common in Washington, where people show up and we lecture them about all the things they've done wrong, not about the opportunities and the things we can do with them in partnership. And there has been a shift in tone of that, and I think we've seen that time and time again. The U.S. government kind of starts on the we want to be partners, but we end up on the here are the things you've done wrong. And I think the shift of this is an investment deal. This is a view of we're not here to tell you how to manage your economies. All economies are done differently. As long as the risk is down, the treatment of American companies is up and higher or equal to, and the playing field is level. American companies compete every day on a level playing field. It's when the playing field is level. And that's why what Bethany's doing at the DFC is so critically important. That further expansion up in the 200s, the ability to have real-time risk analysis, and quite honestly, the speed factor. I mean, one of the challenges of the DFC under its previous it was slow. It was a slow and cumbersome organization that people couldn't move through quickly. And now with the reauthorization, I hope these deals come quicker and quicker. And we're seeing that, right? We are seeing deal flow move at a quicker rate with quicker authorizations and more liquidity coming in the system. So you're 100% right. The most important thing is having the President of the United States say Africa is an important market, having Secretary Rubio say this is a strategic market or markets for us, and then having the U.S. government through its financial vehicles, XM, DFC, et cetera, be there to say, and here's how you're going to have to manage the risk, and we're there with you, not we're here outside of you.
And that's happening with the sector, right? With so much focus on critical minerals, that sector as a whole is on the minds of private capital. I'm going next week down to Florida to a family office event to present on critical mineral opportunities. And of course, through that lens, we can bring in African opportunities. And I think for all too long, for those of us who've been promoting African opportunities in Washington and in the US as a whole, often we were branding it first as Africa and then saying, oh, here are all the sectors you could go into: energy, tourism, agribusiness, et cetera. And instead of just really doubling down on a sector and then putting the African opportunities within that sector from a global lens. And I think the latter is somewhat more effective, given that when you lead with Africa, all the risk perception issues that we've been fighting and the negative just risk perception people have when they hear Africa comes up. And so by leading with the sector, you can disarm a lot of that. And that's what I'm seeing when it comes to minerals.
Yeah, and just 2 seconds on that. I think tying together the sector importance, but also I think it's a time where African governments have to lead with pride of what the opportunity of their individual country is. When you're looking, I spent 20 years at the U.S. Chamber of Commerce managing around small, medium, and large-scale businesses. Large-scale businesses could focus intently on what market they need to be in. Mid-tier that don't have big corporate offices have no clue where they should be going. So as much as African governments, African financiers can come and say, here's the opportunity in X market is where you will find success. Because I think the branding of Africa's open for business actually does a bit of a disservice to the opportunities that African markets individually present and doesn't allow American investors to know where they're going. And they're not going to spend the time or interest to go find it on their own. They kind of need to be led in these new markets, especially when the narrative has been so negative over, generations.
Yep. Bethany, did you want to come in on any of that in terms of government signaling and non-financial tools?
Yeah, I think one of the things that you mentioned, and this is something, there's great examples. Those of you that may be familiar with our Ukraine Reconstruction and Investment Fund, we've worked very closely with Department of Treasury and other parts of the U.S. government on that, and that's something that we're trying to do in Africa as well. You're seeing with the DRC, the Strategic Partnership Agreement. We work closely with the State Department, with Treasury, with Commerce. We all have a role to play in that. But Aubrey, you mentioned also looking at things from sort of a sector lens. And that's another area where I think that we are trying as a US government to bring all of the different tools that we have and to really signal that we are looking to increase private capital and increase investment along the value chains in each of these sectors. And so that is where, it's really important for the US government, for each of these agencies, with each of the things that we do, to say that we are looking to bring these companies to these markets and really looking at what are your financing needs in the sector, but talking about beyond financing needs, and this is where things like Commerce come in on advocacy for companies, and really looking at that we are showing up as a U.S. government, and we are showing up all of these agencies with all of our different tools all along the value chain in each of these sectors in these markets.
Yeah. And one quick question, maybe follow up for you, Bethany. It's just about DFC's appetite for covering non-American companies with political risk or other things. I know the BUILD Act gave a lot of that power, but I also recognize that there's a very strong American preference for companies. So, are there interests for the DFC to cover allied companies when there's not American interests? Or maybe you can give a perspective on that.
Yeah, so I think we're really looking, we are looking at U.S. companies, but we're looking at, U.S. aligned companies, companies that are going to help bring capital into markets that are advancing strategic interests, they're advancing economic development. And so we are looking at companies that are U.S. companies, companies that are aligned, again, with interests that share our values and that share our interests, particularly in things like critical minerals, infrastructure. So we are open to these companies. And again, what are our shared interests, and how can we try to advance those with private capital?
And we had some questions from the audience about development along corridors. And so maybe we can come in and Masu and Fanta to speak to how corridors can be development to, platforms, and how others can invest alongside. Fanta, I know you wanted to comment on the last point, but maybe on this one as well.
Yeah, sure. Aubrey, I think just quickly on the last point and the signaling point, right? So I think government signaling is great, but I think it's important to realize and highlight that the private sector is really in some way the driver of that, right? I know you mentioned you got calls from, companies from all over, but I'm also sure that they had no real clue what really went into those headlines and what specific tools were available. I know things are still moving, but once things are settled, it would be great to get a level of dissemination of kind of what these tools are and what it really means and who can access what, where. And I think us as advisors, can play a role in that. But I think getting a bit more clarity and dissemination as an initiative would be great, because the private sector is key in actually making sure that that's tapped into. As much as people were very familiar with like the USAID and those type of models, I think now that there's this shift and these products are becoming more central, it's important to ensure that it's well understood across the board. And then to your question,
understood by private sector, but also our embassies, for example, the U.S. embassies are now in charge of kind of commercial diplomacy, and commercial diplomacy is one of their kind of KPIs, if you will, and they are going to have to be front lines of supporting projects and matching project sponsors with the tools. and investors. And so I think we're going to see a lot more out of that. And it's always been an uneven bag. Some of the embassies have had a great job, done a great job. I think of the U.S. Embassy in Kenya over the last few years, and others that did a ton of facilitating investment. But now that's on the books for everyone. So that's going to be an interesting change in the U.S. footprint.
And I think, on the critical mineral, question and just the corridors. I mean, if critical mineral is central and really important to the new U.S. vision, I think Africa is going to be critical and not peripheral, right? Like if we touch on the few countries I listed before in West Africa, whether that's Cote d'Ivoire, Senegal, Guinea, but even looking broader, right, in DRC, Morocco, if we focus on Francophone Africa, they're all key when it comes to like critical minerals. And when we look at the corridors, whether it's the Lobito corridor or the Liberty corridor, they're great opportunities for investment, right? I think everything is to be done there. Infrastructure investment is needed, railways, etc. So there's a lot of opportunity to attract U.S. investment, but I think the reality is like everyone is looking at those corridors. So it's really going to be a point where people will go, different countries with their own strategies will go at each other, and being able to empower the different governments and making sure that there's truly that partnership and collaboration spirit as opposed to, the dictating, agenda, like Aubrey was mentioning before, I think will be a key differentiator. Approaches are very different. And the truth is some players, some countries have been around for a while with ways that, local governments, countries are very comfortable with, right? So what
Yeah.
do we bring to the table that is gonna effectively compete with that? I think that's gonna be one of the angles that need to be looked at carefully and strategically executed for the US to be successful in these corridors.
Yeah. So just two
Can
comments on
I
that.
just
And
jump
I'm
in?
also,
I
yeah,
just want
exactly. I
to
want to bring you in on this.
thank you. No, I
Go
was
ahead.
just going to say, I think it's really welcome to see this very focused engagement on corridors because Africa's strategy is one about regional integration and creating larger agglomeration through integrated markets. And so that is really becoming a very focused strategy and priority for the continent. But there's several other corridors that have actually been
Yes.
moving very well. I think we've seen the Tanzanian standard gauge rail. We've seen the Kenyan rail that's now extending into Uganda that'll also move into Central Africa. We have the Djibouti-Ethiopia rail. So there's a lot of rail projects, but it's not just transport corridors. These are transport corridors that will become many other things, as we've seen with the Maputo corridor many years back. In fact, Maputo was one of the first corridors that became very successful with the links between South Africa and Mozambique back in the day. So I think this is fantastic, and I think we need to all keep pressing ahead on that. It's been on the cards for a long time, and now we're finally beginning to see traction. So TDB has been very active in several of these corridors, and we're looking at power transmission lines now on the Lobito corridor to support what's been happening there as well.
Yeah. And Matsu, that's exactly the point I was going to bring in, which is that some African DFIs, while they may not invest directly in mining, they invest in a lot of the infrastructure around. I know that's DBSA's kind of position, and as well being able to do the related infrastructure. And then there have been a couple other projects recently announced, water projects along Lobito, that you can see. And I know there's similar agricultural products or projects being developed. I actually have a forthcoming report for the Atlantic Council coming out on future mining corridors in Africa and how the US government can support them. So that's to speak to one of the questions about asking about other corridors, not just Lobito. The question is, how can we replicate the success we've seen and the focus? For me, it's a lot about the focus. In the past, US footprint, commercial footprint in Africa hasn't had a lot of focus. It's all over the place, a lot of diffuse projects, diffuse resources. And now we're getting more focused around these corridors. As we lean, and I know there's going to be a lot of questions we unfortunately don't have time to get to today, but I would love to kind of go around the panel and just hear about some quick wins on the US-Africa partnership front that we think are possible in the next 12 to 24 months. To see, how we can collectively, all those that are participating, us on the panel, advance them, because quick wins are something that the U.S. hasn't necessarily always been good at, whereas the Chinese come in quickly with their mobilization capacity, et cetera. So maybe we can start with you, Fanta. What do you see are some kind of quick wins on U.S. African partnerships in the next, let's say, 2 years?
Thanks, Uvri. I think focus and execution in some of these, high scale, high potential projects definitely would be my top priority. I know we've talked about it before, but some of the infrastructure investments through DFC, when I look at a specific, if we stay on the corridor topic, the Liberty Corridor, Guinea, Liberia connection. So some of these investments, being funded and executed properly, I think over the next 2 years will be critical because and the importance of it goes beyond the operations of whatever industry it is. It's just how it ties into just national plans, right? When we think of, I think it's quite a large project and it's also home. So I come to it a lot, but when we look at Simandu, what is built around it is an entire national plan, right? So it's infrastructure investments that U.S. funding can help push that will create more than just a successful investment, but economic development, for the entire country, but also the region. So yes, so I think quick wins in some of these areas and DFC at the forefront of that, continuing some of the great efforts that Bethany and teams have been doing so far.
Great. And Masu, over to you. Any areas of quick wins in U.S. strategic partnerships, perhaps with African DFIs?
Yeah, well, I think first of all, we're very happy that AGOA has had some kind of extension that's starting to move. I think consolidating that would be great, and then of course building on the success that DFC has had with the African Finance Corporation to be able to do more of that, to have multiplier effects with other African DFIs because the capital is very scarce, as we all know. And I think the one way of having a bigger impact in Africa and also sending strong long-term commitment signals would be to work with more African financial institutions. To be frank, I think there's a lot more that can be done in that space. As I said earlier, the security sector and the health sector have been success stories in many ways, but I don't think on the financial side there's been enough of that kind of traction and scale. We've seen it in bits and pieces with the commercial banks. I think the cities of this world and others have been felt on the commercial banking side of things. JP Morgan is starting to come in a little bit, but it's great that DFC has been scaled up. I think the 200 billion that I've heard is music to our ears, and I'm very happy to hear that there's more appetite. I think that's been an issue and risk appetite on more than just lending, because we know that to really drive projects, you really need to be in a leadership position where you can put equity on the table.
Completely agree. Scott, thoughts?
Yeah, I think there's two quick wins. The first one is a little bit easier to do, which is bring more African leaders to Washington or have more delegations of U.S. senior leadership going to the continent. There's reports of Landau going soon. I know that at one point VP Vance was headed over to the continent. So getting more traction of U.S. boots on the ground from senior political level is probably the easiest win you have, because it comes back to Aubrey, your point, is it needs attention, and the best attention is from those that are in leadership in the U.S. The two other points I'd just say real quickly is the real opportunity along Libido Corridor is a win-win for U.S. and those that are in supporting Libido, which is value addition. Even if it's mid-level value addition, not final product, it allows it to come through the process, creates jobs locally, builds the skills of local employees and employers, but also provides an opportunity for end manufacturing in the U.S. if we're the ultimate off-taker. And then the last point is you can't do this without grid expansion. And so figuring out quick ways to use MCC, DFC, XM to figure out that expansion, whether it's localized, I'm agnostic on the generation side, but there has to be more power on the continent to support the manufacturing growth.
Absolutely. Bethany, any thoughts? I know that for many of us, we will be at Mining Indaba coming up soon, and there will be many representatives from U.S. government agencies. So for those looking to learn more about the tools or interests, and I know there were many questions we didn't get to, there will be kind of an in-person engagement potential coming up. So thoughts, Bethany, on quick wins in the next 24 months?
Yeah, so I know that we've talked about our reauthorization, but I think, really for that is us really executing on that reauthorization, and we're getting everything in place so that we can do all of the, and use all of our expanded tools. I think I've mentioned this before, but I can't stress it enough. I think really working with the other U.S. government agencies, you mentioned MCC and their key with USTDA, Treasury, Commerce, XM, State Department, all of our different U.S. government agencies that are advancing economic development, advancing investment, advancing U.S. foreign policy on the continent. I think us, working in concert together, continuing to do that as we've done in on some other examples that we gave on Ukraine and otherwise. So I think that's another quick win for us. It's been mentioned here, but just the ability that taking more risk, realizing that there's more reward often when you do that, and being sort of wide-eyed about that. There's a lot of opportunities. There's a lot of investment opportunities. There's a lot of companies that want to get in these markets, and we are going to be there alongside them, and really want to make sure that we are using DFC's tools to the fullest. So I think those are some of the things that we can do over the next sort of 12 to 24 months. That would be some quick wins for bringing investment to the continent.
Thank you, Bethany, and thank you to all the panelists. And again, looking forward to engaging with you continued in Washington, but also many of you at Mining Indaba coming up in South Africa. Let me now turn back over to Shannon from the Invest Africa perspective on what's forthcoming. Thank you, everyone.
Thank you so much, Aubrey, and thank you, Bethany, Scott, Admasu, and Fanta. We so appreciate you joining us for today's dialogue. From an Invest Africa point of view, we expect this to be the first of many webinars and events, etc., to help sort of share our collective expertise, understanding, network opportunities. So just for today's perspective, we had almost 500 registrants sign up for participation today. I think very indicative for the appetite for understanding, transparency. That's what we're here to help promote. And there's several opportunities for engagement. Most immediately will be on January 29th for another webinar, this time a deep dive on the DRC. A lot of questions came up today. We will be joined, among others, by our Invest Africa chairman in the U.S., Paul Hanks, who's also on the call today. But I think please continue to engage with us. Let me kick it over. And again, thank you all for joining and sharing your valuable time. Let me kick it over to my colleague, Callum Hill in London, just to go into a little bit more on the upcoming events. And again, thank you all so much. And thank you, panelists. Callum?
Shannon, thank you very much. And just like to reiterate our thanks to the panelists and to Aubrey for moderating. We're fortunate to have you all as partners and colleagues within the Invest Africa network. As Shannon mentioned, we have a number of exciting opportunities coming up in the next couple of months, kicking off with the DRC webinar, which will, given today's conversation, will really be more of a deep dive there on the 29th of January. As Aubrey mentioned, the Invest Africa Mining Series takes place on the margins of the Mining Indaba in Cape Town. We'll have a number of US government agencies represented across the 3 days of programming there. Please do feel free to reach out to Shannon or I, and we'll follow up over email to everyone who's participated today. We're pleased to be launching our Invest Africa investment dialogues, high-level conversations in Washington and New York taking place probably on a bi-monthly basis with senior government and private sector investors focused on Africa. So again, please do reach out. More in the long term, we'll have a robust schedule around the IMF World Bank Spring meetings in Washington, D.C., and then Invest Africa's flagship conference, the Africa Debate, takes place in London on June the 3rd. So lots of exciting opportunities upcoming with a US focus at Invest Africa, and we look forward to having you all join us for those. So Shannon, back to you.
Thank you, everyone. Have a good rest of your day, evening, and look forward to engaging with you more in person, virtually in the future. Thanks again to our wonderful panelists. Bye, everyone.